Hello, good morning and welcome to today's episode of True Potential's Morning Markets. If we set out how we're going to line up the video today, we'll cover off equity market performance from Friday, we'll cover off some of the key data points that we witnessed on Friday and also early this morning on Monday, and then cover off some of the key data points coming out for the rest of the week and things you might expect us to talk about later on this week. Starting with market performance, if we think about equities and we think about regionally, starting with Europe, core Europe, so Germany, France, Italy, etc. That region provided positive returns, whereas if we think about the more domestic region in terms of the UK's FTSE 100, that actually delivered negative returns of around 40 basis points. Thinking over into the US, we actually saw positive returns of 22 basis points. So the theme of market volatility continues and remains. That theme also extends into bond markets with yields remaining elevated. If we think about where yields closed during the week, the US 10-year yield closed at 3.25 or 3.25 yield, and the US 10-year gilt closed at around 2.5. That's off the back of last week's US Federal Reserve 75 basis point interest rate hike and the UK's Bank of England's 25 basis point hike. That's played through into FX markets. If we think about sterling, bounced back from its low of 120 during the week to close at 122 and closed at 116 versus the euro. Into commodity markets, we've actually seen something that would be quite positive if it remained for the inflationary prints that we've seen, with Brent crude falling to around 110 and WTI at 113. So they're down from their their highs of around 120. Think about some of the key data points that we've seen from last week and this morning. If we start with Friday's US industrial production numbers, the reading came in as a positive 0.2. However, this was below market expectation of positive 0.4. Drilling down into the contributors and thinking about what has contributed to that undershoot, it's mainly come from new machinery orders and also food production. So what we're taking away from this is that the US Federal Reserve's interest rate hikes are slowing demand and should help combat the higher inflationary numbers that we're seeing. Looking at this morning's data point from China, from the PBOC, they have kept interest rates the same. Now, what we find interesting about this is it continues to show the divergence in policy that we're seeing from Western economies in China. Now, if we think about the rest of the week and what is coming up, we have a number of central banks meeting minutes, given that they've done interest rate rises, so the market can see what they've been talking about and what their expectations are in more detail than what has come out already. We've also got a number of flash PMIs coming, so they give us an indication of the performance of the services side of the economy, but also the manufacturing side. And finally, the other key bit is some of the inflationary prints that we're seeing from major economies. So thank you for watching, and we'll catch you tomorrow.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.